rally, but the rally won't stick. And everything else on the chart is neutral, like sideways right now. India is has had a nice rally since February, like many other markets. It was in a bear market pattern. That 50-day crossed the 200, which is called the Golden Cross. Now we have our own version of this, and we say that the gold line, the 50-day must cross the red line also. The blue, crossing the blue line is not enough. It has to confirm by crossing it. So right now, I mean, the price is above the 325, which is what you need for a sustainable rally. It can't, if it falls below that, then the rally is probably over. Yeah, which has gone on since February. So the DMI in the bottom is weird looking. I mean, it was a buy signal that collapsed. I mean, that pattern is very strange. In fact, a lot of the DMIs are totally weird. It looks like radiation hit the chart and like mutated the DMI pattern. And this is nothing. You're going to see a lot weirder things in a few minutes. Russia is caught in the trading range. Russia has been going down for years, since probably 2011. The low was probably around 10, and it hit 12 a few months ago, so that's very close to the 2008-2009 low. And Russia is an oil-based economy. It's commodity-based, but oil is the most important commodity. So the drop in oil prices really killed it, but a rise in oil prices is going to rev it up and excite it. So right now it's caught in the trading range. You see that bar is like going sideways. So it's trying to reset into a rally pattern, which will be the first time in 4 years. So then it will just go up and up and up. Look at the DMI there. This is one of the mutated, weird-looking ones. That blue and red line keep crossing each other, like in some crazy squiggle pattern. It's very strange. Notice the rest of the chart doesn't look like that. The black line, which is the trend line, fell to 1010, is extremely low, and it needs a complete absence of trend and a collapse of trend. And you notice that there's no trend, it's actually going sideways, so that's correct. But that black line has to rise, and it eventually has to cross the blue and red line, and it matters whether the blue is above the red or the red's above the blue, whether it's an uptrend or a downtrend. So we will see. This will take weeks and weeks and weeks before we have, maybe months. So that's the end of the BRICS. What are the best performing currencies? Here they are. The black line is the US dollar. Almost every currency on earth is up against the US dollar this year, which just says the dollar is really weak. Maybe it's not everyone. I checked lots of them. They were all up. So there might be some obscure ones. But so the orange line is the ruble, the Russian ruble, and the bronze line is the Brazilian real. Notice they're exactly the same and how much they're up. And notice the ruble has weird patterns. It's like it's a small currency. It can be pushed up and down radically in a short time. So the Canadian dollar is poor. That's been weak for years. Now it's doing really well. And you see the yen is the red currency. And that's going to, it may have a pause in the near future, but that's an after effect of what the central bank did for years to drive it down. So it probably has more upside. The dollar is in a bearish pattern. You need that blue line to decisively break the red line. They're hanging together right now. But this is generally bearish looking, so it looks like it wants to go down further. I mean, it can go sideways. I mean, it's fairly trendless to slightly negative. So, but this doesn't look good. The euro is actually getting stronger as the dollar's been weakening. And you can see the pattern, the gold line is on top, and the blue line's trying to cross the red line, so you have the gold, blue, red. That's a bullish pattern. It's the exact opposite of the red on top, then the blue, then the yellow. So the dollar is developing the bearish pattern, the euro the bullish pattern for the long term. Notice there's no trend. See that DMI on the bottom. Once again, you have this blue and red line sort of dancing around each other like a frenzied snake. which indicates no trend. When you see this, and I've seen it many, many times, it means is the stock or the market wants to make a big trend change. Now, the trend change could be up or down. It's not telling you which direction it's going. But it's saying like a big change is coming. And it can make this dance like for a long time before that happens. And then that black line has to rise and cross at a certain point. It's bullish or bearish. So the British pound, notice that black line's been very weak for months now. Pound has been going down in all this Brexit worry. Notice it gapped up the last few days. There's that huge gap on the chart. That gap will have to be filled. This chart pattern on top with the moving averages is totally bearish. The red line's on top, then the blue, and then the yellow. So that will not become unbearish until that yellow at least crosses the blue, and then it needs to cross the red also. So that's not going to happen in a week or a day or several days. It could take like many weeks, a few months. And notice that you've got that blue and red line on the bottom, and they're all like intertwined and dancing together, and it's not can't decide what it's doing. So I want to see break up or break down. The Swiss franc, this is something worth owning. There's like 3 or 4 currencies in the world worth owning. Swiss franc is one of them. The Australian dollar is one of them. The Norwegian krona is one of them. The dollar is like maybe sort of. The dollar is definitely not number one. And we all own dollars. So the Swiss franc's 1 to 1. In the early 70s, it took 5 Swiss francs to buy $1. Now it takes 1. And this actually went almost to 1. You needed like to $1.40. $1. You need $1.40 at one time to buy 1 Swiss franc. So the Swiss franc has gained value over the decades, and the dollar's lost value. So that's the type of currency you want. Australian dollar you want because it trades with gold. I actually wrote an article in Seeking Alpha. I researched this. The Swiss franc actually had a slightly better correlation than the Australian dollar with gold. So that's another thing to keep in mind, saying, a rising gold market will actually be good for the Swiss franc too, which almost nobody knows. That's why you need to read my Seeking Alpha articles. Patrick, you're falling down on the job. Saying you should say, yeah, we're Seeking Alpha. Daryl's Seeking Alpha. That's I pay him to chew. He gets $1. He gets $1 every time he says. So you should read Daryl's Seeking Alpha. So far he hasn't made a lot of money. So it's a good thing he's a good trick. So here's the Japanese yen. Look at this chart. Up. Now it's overextended. You can only go up for so long. You've got to come down, and it's like a balloon that's overexpanding. You got to let some air out of it. So the 50-day, that yellow line is way above the 200s, way too much above. And then the price itself is way above that. So it's got to at least come down to the yellow line, which is done twice. I put the bars under that. And then it probably needs to come back to that blue line. Now this does not make it bearish. It simply is a move within a bull move where it's taking off some pressure so it can go high. So it would take a lot to turn this bearish. We'd have to go below that red line and stay with it. So it's not even anywhere near that red line. So the yen has a staying power. Now it doesn't mean it won't have a sharp sell-off in the next several weeks or a couple of months, because it's too overextended. It's got to go down a little before it can go up. So this is just as a lot of the other charts were very bearish, this chart is very bullish. Everything about it is bullish. The trend on the bottom is a buy signal that's strengthening. The MACD is above 0, which is a bullish area. The RSI is above 50, which is the bullish area. The moving average is aligned in a long-term bull pattern. I mean, this is not going to lose its bull market tomorrow. Maybe in a year it might, but it's not going to do it so. Canadian dollar is bullish, but not really bullish, not like the yen. The yellow line has gone above that red line, which is our double golden cross we're looking for. And it is going in a sideways pattern. We still need that blue line to cross the red line. And it's like going sideways, it's bumping around, it's not in no hurry to do this. And the trend is like being lost on that bottom. The black line's falling to a low level. So this means sideways movement. So this is telling you it's going sideways for a while. And then and maybe needing that before it can go higher. So, and that's probably where we'll go, we don't know yet. But you know, if commodities increase, Canada is one of the commodity-based economies. Canada, Australia, Norway, Russia, South Africa. So like if commodities do well, Canada does well. The currency does well, the stocks. Australia, which tends to trade with gold, it had a lot of internal problems. There were a lot of articles being written that the currency is going to crash, it's going to go to 60. You know, it promptly turned around and started going back up because gold is doing well. In fact, it has not gone up enough with gold already, so at some point it's got to catch up to it. So the trend is broken down at the bottom. It's like, that's another trendless thing. Notice the blue and red lines are like crossing like this snake dancing in a frenzy. So like this wants to go, it's going up, but it's really more a sideways movement. The RSI on top, that first entry is pretty good. It's above 50. So, and if gold keeps going up, the Australian dollar has to go up, has to follow. Now, gold may go down for a while, like David said, but not as much as he said. Here's the real. This is like pretty bullish, but that blue line has not crossed the red line. We are looking for that for it to become long-term bullish. So it's bullish for the moment. Now the RSI, this is very strange. It actually lost strength. That bar going down as it was going higher, this indicates it should have had a big drop. But it didn't. Suddenly it like recovered and went back up. So there's got to be some type of government intervention that made this happen. It like, because the technical analysis got broken somehow. And you need a big player to come in and stop it. So something is pushing the real up artificially. So, and if you look at the bottom in the trend line, the blue line's above that red line, which means bullish, and the black line is rising or staying in the middle, which is also bullish. So this has been bullish since February. It's still bullish. It hasn't lost its bullishness yet. So don't expect a collapse in the short term, and if that blue line crosses the red line, then it's turned into a longer term bull trend. Okay, that's it for, okay, we're not comparing energy commodities, we left that blank. Oil, something's wrong with oil. I have been very bullish on oil since February. I wrote my first article on Seeking Alpha in late February saying the oil market is going to turn bullish. The bottom was February 11th. I published this article the 26th. I think, that doesn't mean I gave it to them the 26th. They publish it whenever they feel like it. So at least before that date, I wrote it. So, and I've written a series of articles since then saying oil is bullish, oil is going up, while lots of major investment banks saying it's going down, it's finished, it's going to go back down. They've been wrong. You can read all my articles. There's about at least 5 of them, I think. They all have been correct. But something's wrong now. Oil's lost strength. It's just like it's like weak. It's like it's rallying, but it's not really rallying. So, you know, I see it's going to get stuck in some sideways movement for a while. And it will probably need that before it can go higher. Now, this chart has not turned long-term bullish. It is bullish because the gold line crossed that blue line. But the gold line has to cross that red line. It's not done that yet. And that's the first sign of long-term bullishness. Then that blue line has to cross the red line. That's the final sign. So this is bullish, but not like forever. So we still need these signs to take place. Now the price move, the day-to-day price movement, it's just weak. So like something's happening that's keeping it like restrained. And in the beginning, it was the rally was very enthusiastic. That enthusiasm has gotten lost if you watch the day-to-day trade. So I'm expecting short-term movement. It's not going back to the low. The low was actually 26. This is the current futures, which was never at that level. So, but because there's been fundamental change in the market, the fracking, a lot of the fracking production in the United States has fallen dramatically. One of my articles is taking out, or 2 of them, the average increase in demand for oil has been 1.6 1.6 million barrels a day every year since the credit crisis. So new supply has to come online to compensate. Now, a lot of supply came online, but that supply is being eaten up and absorbed by the market. And there's no supply after that to replace it. So there's going to be a crunch in oil probably next year that will drive it way higher. Natural gas has had a rally since the last meeting. That rally doesn't look too sustainable at the moment. That yellow line is crossing the blue line, which is quite bullish. That's the traditional golden cross. My guess is the price is going to come back down to that. It's going above that red line, but it looks very tentative. So there'll be multiple buying opportunities. Natural gas should get to around 4. And the high lately has been about 280. And it was down to 2, so it was actually down to 176 at the bottom. So it's way underpriced historically. So still, it's not positioned for a long-term rally yet. It's in the very early stages of that. So there's lots of opportunity to buy. PBW alternate energy. This is not doing well. It's like solar and wind and etc. This is a pure bear market pattern. The red line's above the blue line, above the yellow line. So there's no rally here at all. So alternatives have not benefited. Uranium has, these uranium companies, they haven't done badly. Uranium has collapsed. David showed me the chart. I'm not sure I have the chart here. It's fallen to $4 or what's the price? The companies are doing better though. So, but they're still they're in terrible shape. So there's nothing permanently bullish about this. It needs to break above that red line as first move. It hasn't done that yet. And it could easily go back down below the blue line. So watch that. Precious metals. Silver has to do it. The gold is the black line. Silver has actually been doing better lately. Palladium is doing really badly. And it's not in a bull market at all. Platinum is slightly bullish. And silver is overtaking gold. It overtook it in April in its year-to-date performance. Silver always does better than gold in the end. Usually not in the beginning, but at some point in the end it does twice as well as gold does. So, gold is also a tinge like oil. It's sort of losing its upward momentum. It's stuck in these more of a sideways consolidation pattern. Notice in this chart, there's 2 big gaps recently. Those gaps need to be filled. So that could take it back down to, this is GLD 115. That'd be about 1200 on gold itself. The chart overall is bullish. The yellow line crossed that red line long ago, and the blue line is crossing the red line. So that's a perfect bull market pattern. So this is a long-term bullishness. And still, it probably needs to come back down to whatever that blue line would be in the next several weeks. There's a loss of strength in gold. Not as bad as oil. Oil is actually worse. And this is really a long sideways. In fact, it looks like a broadening top or a broadening pattern, if you know chart patterns. Generally, this is a bullish chart. So, gold miners have been super bullish. They've been too bullish. They need a pullback. They've gone up too far, too fast. Notice that yellow line's way above the other line. It needs to come down. The price needs to come down probably to the 200-day, which is the blue line. But the blue line is crossing the red line like in gold, so this is a long-term bull pattern. Notice that RSI has been losing strength this entire time. That's not a good sign either. So a sharp drop in miners for several days or a couple of weeks would not be surprising at any point in time. It does not mean it's not bullish anymore. It just means it's has to take a break. Silver is also quite choppy. It's filled with these gaps. That yellow line is way above the red line, and it needs to come down. It probably needs to come down to that red line, which is around $15 an ounce. So this choppiness is not a good sign either. Platinum is not even, it's barely bullish. because that yellow line's crossed the red line, but the blue line hasn't. It's a sort of inert. Palladium is not bullish at all. So those are the precious metals. Now, palladium and platinum are